Well, good morning, Yogendra Rana here. Topic for our discussion today is bridging the insurance protection gap. Bridging the insurance protection gap. Encouragingly, the Indian insurance sector has shown tremendous potential in recent years. Innovations in technology, supportive regulatory developments, and a vibrant ecosystem of insurers, insurtechs, and distribution partners are converging to redefine how protection is delivered across geographies and demographics. This dynamic environment is fostering a greater appreciation for risk mitigation and financial planning among a wider section of the population. India, India's growth story is one of the ambition, resilience, and transformation. As the country strides confidently towards becoming a $5 trillion economy, one of the most promising levers of inclusive progress is the expanding landscape of insurance. Insurance is no longer just a financial product, it's a tool for empowerment, a safeguard of aspirations, and a key pillar of social security for every citizen. So the sector has shown good performance. Reason being, this dynamic environment is fostering a greater appreciation of risk mitigation and financial planning among a wider section of the population. Yet, as we accelerate towards the goal of insurance for all by 2047, the time is ripe to strengthen our focus on bridging existing gaps in insurance coverage. So, by innovating, collaborating, and fostering awareness, we can build a future where every Indian, urban or rural, salaried or self employed, has access to the safety net they deserve. But the current level of penetration, while improving, still leave a sizable part of the population vulnerable to financial shocks from unforeseen events. Several factors contribute to India's insurance protection gap. A significant challenge lies in affordability and accessibility, particularly for low income segment and those living in rural areas. The traditional insurance products may not always align with their financial abilities or specific needs. Furthermore, a lack of awareness and understanding about the benefit of insurance persists, often fueled by cultural factors and a lack of financial literacy. So, the complexity of some insurance products and the perceived heavy processes can also function as deterrents. Distribution channels of some insurance products and the perceived distribution channels, while evolving, need further strengthening to reach the last mile effectively. Addressing these challenges requires a multi-pronged strategy. Innovation is paramount. The industry must focus on developing affordable, accessible, and need-based products that cater to the diverse financial realities of India's population, including gig workers, rural households, and urban low-income groups. This may involve using technology to create micro-insurance products with simplified features and premium payment options. So, bundling insurance with other essential services or government schemes can also enhance penetration. Equally important are awareness campaigns that educate the public on the critical role of insurance with focused outreach towards women and underserved rural communities, helping dispel myths and building trust. So, using digital platforms and community engagement initiatives can amplify the impact of these campaigns. Financial literacy programs that highlights the importance of risk management and financial planning from an early age are crucial for long-term impact. So at the policy level, regulatory support must continue to evolve, encouraging innovations through flexible frameworks while safeguarding consumer interests, streamlining regulatory processes, and promoting digital adoption can reduce operational cost and improve efficiency. Furthermore, strategic public-private partnerships can significantly enhance penetration and efficiency by combating the outreach and infrastructure of the government with the agility and predictability of private insurers, collaborations on risk pooling mechanism, and using government schemes to embed insurance coverage can be highly effective. Technology will continue to play a transformative role. Insurtech companies are already showing the potential of artificial intelligence, machine learning, and data analysis to personalize products, streamline claims processes, and enhance customer experience. Embracing these technological advancements will be crucial for expanding reach and improving efficiency. So collectively, these pillars innovations, awareness, supportive regulations, strategic partnership, and technological adoption can drive meaningful progress in closing India's protection gap and ensuring broader financial resilience across the country. By making insurance more accessible, affordable, and understandable, we empower individuals and families to protect their financial futures and contribute more confidently to the nation's economic growth. So while the challenges are significant, the path to a well-insured India is achievable through innovation, collaboration, and unwavering commitment from all stakeholders. By addressing the production gap, we not only fortify our economy against unforeseen shocks, but also uphold the financial dignity of every citizen, paving the way for a more secure and prosperous future for all. So, encouragingly, the Indian insurance sector has shown tremendous potential in recent years. Innovations in technology, supportive regulatory developments, and a vibrant ecosystem of insurers, insurtechs, and distribution partners are converging to redefine how protection is delivered across geographies. So this dynamic environment is fostering a greater appreciation of risk mitigation and financial planning among a wider section of population. So the global insurance sector is facing a formidable challenge, rather. The growing protection gap in life and property and casualty insurance. So this gap representing the difference between needed and purchased coverage poses significant risk but also presents unique opportunities for growth. So understanding the protection gap is important because life insurance faces a significant gap with a substantial portion of the population either uninsured or underinsured. So this gap poses challenges but also opportunities for growth through product innovations and enhanced consumer engagement strategies. So the industry has recovered from the pandemic, but profits still lag behind pre-pandemic levels, particularly in the PNC sector, where 2022 profits were about 10% lower than in 2009. So despite this, personal property and casualty insurance has been average growth, lagging behind commercial PNC growth. So the protection gap is complex. Issues with profound implications are there. So the life insurance market in the United States alone had a $12 trillion mortality coverage gap as of 2020. So the protection gap is particularly noticeable in the face of extreme weather events. This gap is not just a statistic, it reflects the vulnerability of millions of individuals and businesses in the face of life's uncertainties. So the reason behind this gap are multifaceted, including a lack of consumer awareness, affordability issues, and complex insurance product offerings. So the life insurance gap is particularly pronounced. The scenario is mirrored globally, especially in emerging markets where the insurance penetration remains low. So it has to be improved. Thank you very much.